Welcome to the deep dive. I am so glad you're joining us today because we've got a fascinating one for you. Okay, let's unpack this. What if the underlying math of the U.S. tax system reveals that undocumented immigrants actually pay a higher effective tax rate than similarly situated U.S. citizens?
Yeah, which is definitely not what you usually hear, right?
Exactly. I mean, the common narrative you hear all the time is that unauthorized workers are just operating entirely off the books, draining public resources without contributing to the ledger. But today, we're looking past the rhetoric and we're digging straight into the tax code.
Because when you do that, a completely counterintuitive financial reality emerges.
Right. And to do this, we are exploring a really dense, highly provocative academic paper titled The Undocumented Immigrant Tax. It's written by a law professor, Francine J. Lipman. And before we go any further, I just need to say this right up front. Immigration sparks some of the fiercest political debates out there.
Oh, absolutely, on both the left and the right.
Yeah, but we aren't leaving the politics entirely at the door today. I want to make it crystal clear to you listening, neither of us is taking a political side here. We aren't endorsing any policy or the author's viewpoints.
Right. Our job today is just to impartially report on Professor Lipman's findings.
Exactly. We're simply unpacking the math, the legal structures, the actual tax codes outlined in the research so you can understand the underlying economics. So to kick us off, can you define Lipman's central thesis here? Because it sounds almost backwards at first glance.
Yeah, I mean, the goal here is to strip away all the assumptions and just follow the flow of dollars and cents. And Lipman's central thesis, it relies entirely on existing statutory frameworks. Like, she basically maps out how the U.S. system is deliberately structured to absorb billions in tax revenue from undocumented immigrants, while at the exact same time, erecting legal walls that prevent them from accessing the tax relief programs their income brackets were specifically designed to receive.
Wow. Okay, so it's a dual system.
Yeah, exactly.
Well, to really grasp how this dual system operates, I feel like we have to start at the absolute baseline of daily life. Because, before we even talk about the IRS or pay, is that everyone pays just by participating in a local community.
Right, the consumption and property taxes. The stuff you pay just by existing.
Exactly.
Because think about it. When an undocumented family goes to the grocery store, or they buy clothes for their kids, or pump gas into their car, they are paying the exact same state and local sales, use, and excise taxes as any U.S. citizen.
Yeah, I mean, there's no citizenship test at the cash register.
No, of course not. And this everyday contribution, it extends deeply into the local property tax base as well.
Which is a great point, because I think a lot of people just assume that if you don't own a house, you aren't paying property tax.
Right, they think it's just a homeowner thing.
Yeah, but landlords don't just, absorb the cost of municipal property taxes out of the goodness of their hearts. They bake that tax directly into the monthly rent. So an undocumented family renting an apartment is continuously funding local schools, municipal services, infrastructure, every single time they pay their rent.
Exactly. And Lipman highlights this really stark income disparity to demonstrate why these daily taxes hit this demographic so disproportionately.
Oh, right, the 2004 numbers.
Yeah, so looking at the data from 2004, she notes that the average undocumented family earned roughly $27,400 a year.
Okay.
And you compare that to $47,700 for the average U.S.-born family at the time.
Wow, that's a huge gap.
It is a significant raw income gap. But the real impact, it happens in how that money actually has to be allocated.
Right. So what does this all mean for their day-to-day budget? Because if you are raising a family on 27 grand a year, you aren't exactly, setting up a diversified investment portfolio.
No, definitely not.
Or like funneling cash into a tax-sheltered savings account. You're deploying essentially 100% of your capital just to survive.
Yes, every single dollar is being pushed right back into the local economy for basic taxable necessities.
Right.
And because their income is overwhelmingly spent on survival, they basically bear the full, unfiltered brunt of consumption taxes. Lipman points out that this makes their effective tax rate highly regressive compared to higher earners.
Wait, break that down for me. Regressive meaning it hits the lower earners harder, right?
Exactly. Because think of it this way. A wealthier citizen might spend, say, only 20% of their total income on taxable goods, and then they invest or save the remaining 80%.
Right, which isn't getting hit by local sales tax.
Exactly. But the undocumented family is spending all of their income on taxable goods. Therefore, simply by participating in the local economy, the consumption tax takes a much, much larger percentage of their total wealth.
Oh, wow. Yeah, that makes total sense when you look at it as a percentage. But, consumption taxes are just the localized, unavoidable baseline. The narrative gets significantly more complex when we move from the cash register to the IRS.
Oh, absolutely. It's a whole different ballgame.
Yeah, because Lipman points out that non-citizens residing in the U.S. have actually been subject to federal income tax since the modern system was established back in 1913.
Right.
So if they're in the system and they're paying federal income tax, why does she argue they face a specific, unique, undocumented immigrant tax? Like, what does that actually mean?
Well, it's because the tax code quietly executes what Lipman calls a surtax by exclusion.
Surtax by exclusion. Okay.
Yeah, meaning the system happily accepts their tax payments at the front end, but statutorily locks them out of the major deductions and credits that are literally designed to provide relief to the working poor.
Ah, I see.
And the most prominent example she gives of this is the Earned Income Tax Credit, or the EITC.
Right, the EITC, which, by the way, is arguably the most successful anti-poverty program in modern U.S. history.
Oh, without a doubt.
It enjoys really broad bipartisan support, specifically because it rewards labor, right? Like, you only get it if you work.
Exactly. It's entirely tied to earned income.
And for the 2008 tax year, which is the time frame Lipman analyzes in the paper, a qualifying working-class family could receive a cash refund of up to $4,824.
Which is massive.
Yeah. I mean, if you were making $27,000 a year, a nearly $5,000 return is a life-altering percentage of your gross income.
Right. It is literally the structural difference between treading water and falling below the poverty line. But in 1996, the landscape shifted dramatically for undocumented workers.
What happened in 96?
Well, as part of a major welfare reform law, Congress mandated that to claim the EITC, every single family member listed on the tax return, so the primary taxpayer, the spouse, and every qualifying child, must have a valid Social Security number issued specifically for authorized work.
Oh, wow. So the system willingly takes the income tax out of their weekly paychecks, but then statutorily blocks the relief specifically designed for their exact income tier.
Exactly.
So, like, two neighbors could work the exact same grueling hours at the exact same factory, earn the exact same low wages, pay the exact same baseline income tax, but the undocumented family is just totally walled off from that $4,000 relief check.
Yeah. That exclusion creates a massive divergence in their effective tax rates. And, we saw this play out again on a national scale with the 2008 economic stimulus tax credit.
Oh, right, during the recession.
Yeah. To try and jumpstart a stalling economy, the government authorized checks of $600 per taxpayer and $300 per child.
I remember that.
Right. And the entire macroeconomic strategy there was to get cash into the hands of low and middle income families because they would spend it immediately at local businesses.
Which makes the exclusion paradox so glaring, honestly. I mean, if the goal of a stimulus is rapid economic velocity, blocking the lowest income laborers actively undermines the whole objective.
You'd think so, right?
Yeah.
But last-minute provisions required valid Social Security numbers. So that completely cut undocumented families out of the stimulus package, unless they happen to be married to a member of the U.S. military.
Wow, just entirely excluded.
Yeah. What's fascinating here is how aggressive these exclusions can get legislatively. Like, Lipman details this 2006 proposal known as the Ensign Amendment.
Okay, what was that?
Senator John Ensign introduced a measure that actually passed the Senate with a 50-47 vote. It didn't ultimately become law, but the mechanics of it are incredibly revealing.
How so?
It proposed retroactively denying all tax credits.
Sure.
We're talking the child tax credit, the Hope Scholarship credit, dependent care credits to any undocumented immigrant who was actively applying for legal status.
Wait, retroactively. I'm trying to process the bureaucratic mechanics of that. Retroactively wiping out credits means the government would basically audit families trying to legalize their status, strip away years of standard tax relief, and then generate retroactive tax bills worth thousands of dollars for people who had been actively paying into the system.
Yes, exactly.
That is wild.
Right. It perfectly demonstrates the underlying architecture of Lipman's surtax by exclusion. The system demands the baseline civic contribution, but systematically unplugs the relief valves that lower the effective tax rate for literally everyone else in that specific financial bracket.
Okay, but wait, I'm stuck on a logistical gap here.
Okay, what's that?
Even if they are walled off from special anti-poverty programs like the EITC or emergency stimulus checks, most standard W-2 wage earners overpay their regular federal and state income taxes through automatic payroll withholding, right?
Right, usually you get a refund.
Exactly. If they overpay every week, why wouldn't they just file a basic 1040 tax return and get their routine overpayments refunded? It's like putting money into a vending machine, deciding you don't want the snack but being too afraid to press the button to get your change back.
That is actually a perfect analogy.
Mm.
And the reason they don't press the button is basically fear and bureaucratic walls.
Bureaucratic walls.
Yeah, so because they cannot obtain a Social Security number, undocumented immigrants who want to file a return have to apply for an individual taxpayer identification number, or an ITI.
Okay, an ITI.
Right. And the application itself, the W-7 form, is an 8-page document that requires the submission of original identification documents, like an actual physical passport, not just a photocopy.
Oh, wow. I mean, mailing your primary original proof of identity to a federal agency and operating without it for months, that's a massive hurdle on its own.
It is.
But let's say they clear that hurdle. Let's say they secure the ITIN. What happens when they actually go to file the return?
This is where the trap snaps shut through the W-2 mismatch.
The W-2 mismatch.
Yeah. When an undocumented worker is hired, the employer requires a Social Security number for the payroll system, right? So the worker might provide an invented or mismatched number.
Okay.
Then the employer generates a W-2 at the end of the year using that number. Now, at tax time, if the worker tries to file an honest tax return using their legally obtained ITN and they attach that W-2 with the mismatched Social Security number.
Oh, no. The IRS automated systems instantly spot the discrepancy.
Exactly. The IRS views the filing of an ITN alongside a W-2 with a false Social Security number as documented, written evidence that the individual engaged in unauthorized work.
Man, it's like being forced to pay a cover charge to get into a venue, realizing you don't even want to be there, but the only way to get your money back is to march up to the bouncer and confess that you used a fake ID to get in the door.
Right.
You are just going to walk away and abandon the money.
Which is exactly what happens. The chilling effect is profound. Lipman actually cites specific, isolated incidents where undocumented immigrants were detained by federal security guards and deported simply for entering a federal building to visit an IRS office, just to apply for their tax numbers.
Wow.
And when fear permeates a community like that, engagement with the bureaucracy just plummets.
The outcome of that fear is a phenomenon we can call ghost taxpayers. Millions of undocumented workers have their state and federal income taxes automatically withheld from every single paycheck. They routinely overpay. But navigating the W-2 mismatch trap or risking exposure to immigration enforcement is just too dangerous.
So they simply abandon the overpayments.
Right. And when a taxpayer never files to claim their refund, the government just sweeps those billions of dollars into the general fund.
It is an involuntary forfeiture of wealth on a massive scale.
Well, here's where it gets really interesting, because if walking away from income tax refunds is a systemic forfeiture, that is just a drop in the bucket compared to what happens before the paycheck even clears.
Oh, absolutely.
Let's look at the bedrock social safety nets of the United States. Social Security and Medicare.
The FICA payroll taxes.
Yeah.
Yeah, this represents arguably the largest hidden financial transfer in the American economy.
Right, because we all know the FICA bite on a pay stub. It is a 15.3% tax on wages. Half is ostensibly paid by the employer and half is deducted from the employee.
Ostensibly being the key word there.
Yeah, because as Lipman highlights, most labor economists agree that the actual economic burden of the employer's half is effectively passed down to the worker in the form of suppressed wages. So an unauthorized worker is absorbing a 15.3% effective tax rate right off the top.
And as the government has increasingly cracked down on corporate payroll compliance over the years, Lipman notes that the vast majority of unauthorized workers are actually participating in this system.
Really? Most of them?
Yeah, some estimates suggest over 75% of undocumented workers have these FICA taxes automatically and inescapably deducted from their paychecks.
The sheer scale of the numbers here is hard to wrap your head around. According to the Inspector General of the Social Security Administration, undocumented immigrants and their employers have paid more than $100 billion in Social Security, Medicare, and unemployment taxes on at least $660 billion in unauthorized wages.
It's staggering. I mean, in 2005 alone, They injected more than $9 billion directly into the Social Security and Medicare trust funds.
$9 billion in a single-year funding programs they are legally forbidden from ever using.
Exactly.
I'm trying to figure out the structural imbalance here, though, because the Social Security tax is a flat percentage up to an income cap, right? Like in 2008, I think the cap was around $102,000.
Yep, that's correct.
So if everyone pays the same flat FICA rate on those initial wages, how does the system inherently penalize an undocumented worker more than anyone else?
Well, the penalty happens because the Social Security system is essentially a two-part compact,
Right.
and undocumented workers are only allowed to participate in Part 1.
Meaning the collection part.
Right. The collection phase, the tax itself, is highly regressive. Because of the income cap, a low-wage earner pays that 15.3% tax on 100% of their total income, while a high-income earner only pays it on a fraction of theirs.
Ah.
So the collection phase hits the poorest workers the hardest.
But the payout phase is supposed to balance that out.
Exactly. The payout formula is highly progressive. It is intentionally engineered to provide a much higher return on investment to low-wage earners. It effectively redistributes wealth to lift the elderly out of poverty.
Which is a brilliant, successful safety net.
It really is.
Oh.
But the undocumented immigrant tax is operating in its purest form right here. They endure the brutal regressive collection phase on poverty-level wages, but they are statutorily severed from the progressive payout phase.
Because unless they somehow navigate the incredibly narrow, difficult pathways to obtain legal work authorization later in life, they will literally never draw a single Social Security retirement check. They will never receive Medicare health coverage as they age. They are forced to weave a multi-billion-dollar safety net that they can never fall back on.
Yeah. And if we connect this to the bigger picture, the only federally mandated benefits undocumented immigrants broadly qualify for are emergency medical care in hospitals and K-12 public education for their children.
Right, which was established by the Supreme Court case Plyler v. Doe.
Exactly. Aside from that, they do not have access to food stamps, federal housing assistance, unemployment insurance, or standard welfare program.
They are essentially underwriting the retirement comfort of U.S. citizens.
Which brings Professor Lipman to her ultimate economic conclusion here. By paying billions of dollars into a system they are barred from drawing out of, undocumented immigrants operate as a massive national fiscal asset.
I want you to pause for a second and think about your own paycheck. Think about your own retirement planning. Imagine going to work every day, performing grueling manual labor, and watching 15% of every dollar you earn get siphoned off into a national retirement fund.
It's a lot of money.
And then imagine knowing with absolute certainty that you are legally forbidden from ever touching that money when your body gives out. Your wages are being actively diverted to fund someone else's comfortable retirement while you are left entirely to fend for yourself.
It is a harsh fiscal reality that completely upends the conventional public narrative.
Yeah.
Because regardless of the intense political rhetoric broadcast on the news, the strict mathematical ledger demonstrates that undocumented immigrants generate a massive fiscal windfall for the United States economy.
Yeah.
From coast to coast, their unrecognized tax contributions, through daily consumption, abandoned income tax refunds, and those untouchable payroll deductions, they're actively propping up the systems that citizens rely on every single day.
We set out today to look past the talking points, right? To strictly examine the legal and mathematical realities of Professor Lipman's research. And we found a hidden layer of the economy where billions of dollars flow upwards, subsidizing the American safety net.
The math doesn't lie.
It doesn't. And it leaves us with a final, incredibly provocative thought to ponder. When you look at the sheer scale of the money involved, the daily consumption taxes, the uncollected refunds, the $100 billion in untouchable Social Security payments, if every single undocumented immigrant suddenly stopped paying these taxes tomorrow, how would the U.S. government fill that massive multi-billion-dollar hole in the social safety net we all rely on?
The ledger simply doesn't have an easy answer for that.
No, it really doesn't. Something to think about the next time you look at the deductions on your pay stub. Thanks for joining us on this deep dive. We'll catch you next time.